Hello and welcome to another daily recap. This is day 96 and it's September 9, 2024. To give you an overall view of what happened today is I got one losing trade in EU and one break-even trade in EU, and I got a break-even trade in GU. So overall, it's a kind of losing trade if you can simplify it. So I got with one loser and it's -1 odd today. And yeah, it is a good loser. I followed my strategy. I didn't, I stuck to my rules and I didn't deviate from rules and I executed the trade, uh, you know, seamlessly. So there was nothing bad today. It's just another business expenditure. That's it. So let's start to analyze from the daily on the EU. So on the daily, the swing structure is bullish. Internal is also bullish. This is the strong internal low, weak internal high. Price has mitigated the daily supply and it has chalk bearish, and now it has mitigated this daily demand and chalk bullish. So I can expect the chalk bullish and mitigated the supply. So you can see the price is moving from supply to demand. So price is from the demand from the supply. And now it can go a bit deeper into the supply. But I can also expect the price to react off from this demand and then push the price up to take the liquidity above this candle because this candle was formed during the news. So price can go up, take the liquidity above, and eventually target the daily weak internal high. On the counterpart, the price can even flip this demand to mitigate this pivot demand. So, there is a confusion whether it can be buy stay or sell stay. So let's jump into the my next higher time frame, that is 4 hour. So to have a clear picture. So in 4 hour, the swing structure is bullish, internal is bearish, and this is the 4 hour demand that I'm expecting the price to tap into before either pushing up or pushing down. If this demand gets flipped, so the next demand would be down here within the daily demand. If this demand is respected, then I could follow the bullish order flow. So the bias in Quora is bearish because I can look to play shorts till the price reaches this demand. So if this demand flips, then there is no nothing from the left side from where the price can drag from. So I can just go bearish till the price reaches this 4 hour demand. So if this gets respected and the H1 chalks bullish, so I can look to follow the bullish order flow till the price takes out the liquidity above this candle. So it's very simple. So coming to H1 swing structure is bullish, internal is bearish. So this is the H1 demand in the 4 hour demand that I'm expecting the price to hold. So yeah, our prices almost came down. So there was no POIs to the left, and the only valid POI was this one. So either price could make a bullish sweep zone, and then I can look for shorts till the price taps into the 4 hour demand. Or if the price taps into the 4 hour demand, then I can look for the price to chop bullish and then take longs. It's as simple as that. And it's called phase B. So tapped into the 4 hour demand. So waiting for chalk bullish, which may or may not happen because the chalk bullish is right here, which actually didn't happen, and the price invalidated the 4 hour supply in the 4 hour demand. Now I can look to play the since the demand has failed, so the next high time frame demand would be down below. So until then, I can look to play the bearish order flow till the price reaches the 4 hour supply in the 4 hour demand. So this kind of looks like a pause in the price action, but it has satisfied almost 6 out of 8 criteria. So at 12:33, I decided to look for shorts following the bearish order flow. So this POI, as I initially thought it was, if I didn't have these mechanical rules, I would have thought this is not a valid POI, and I would have not took this trade. But since I'm having these rules in front of me, I'm able to tick the boxes, and surprisingly, it satisfied 6 out of 8 criteria, and it is a very high probability POI. So yeah, it did not sweep liquidity, but it has displacement. It has made shift in the order flow, and it is unmitigated still. It has inducements in the lower time frames, and yeah, it is formed during the kill zones, and it has flipped this order flow. So 6 out of 8 criteria met, and this is phase C. It is not in OT because prices in the discount prices, and the higher time frame is supporting the medium time frame idea because there is nothing from the left from which the price can react from and go in the opposite direction. So the high time frame is clear, and the POI has satisfied 4 out of 8 criteria. Yes, and yeah, it is in line with the medium time frame order flow. So it is a medium probability trade since this box is not ticked. So yeah, I can look to trade even that one, right? So the entry method would be M15 confirm the M15 confirmation entry or the LC1 using M15 lead. So this would be the M15 lead. So I can enter with this lead and then target 2.5. Yeah. So aggressive. I use aggressive entry. I use conservative analysis and aggressive entry methods. So the opposite you can trade, but I trade like this: conservative analysis and aggressive entries. One second. Okay. And what are the risk factors? Though the price has invalidated the 4-hour demand, it is still in the daily demand, which may hold and push the price up. So I must have this in mind while taking this trade. This is the daily demand in which the price is in, and this is the 4-hour demand which recently got invalidated. So there is no tag for the LC1 to play out. So I just waited. It was almost 13, 14. So LC2A actually played out. So there was a fake break here, and this is pullback. So this is actually okay. Wait. Actually, yeah, LC1 played out and it got me tagged in. So I need to maintain the composure, and price actually made a fake break and then pushed up. This act as a pullback inducement, and then price took my stops. So no worries. I was placed at 1350 and stopped out at 28. So no worries because now LC2A is clear. So I can take trades using M15 LC2A, which is a much high probability entry model, and I got tagged in the LC2A model. So at 14:30, I usually leave the desk. I set my trigger here, my the alarm here. Once the price goes below this one, I can just jump into the MT5 mobile app and break even the trades. So it's very simple. And yeah, one more risk factor is that this is a strong demand in M15. It's swept liquidity and push the price up, having some imbalance. If this PBL is to hold, then my stops would hit the sorry my trade would hit the take profit. If this PBL fails, then it's obvious that the price it may take profit. So there's a high chance that the price hitting my take profit. So staying composed is the key. And yeah, price actually took invalidated the PBL. I stopped break even my trade right here, and I had a high expectation that the price can go and hit my take profit, but I don't know what happened. Market dynamics changed and the price hit my stop loss. So it's fine. So I was stopped at break even. I managed my trade perfectly. So it is what it is. Analysis was perfect. Entry was perfect. The market is unique at some point, and yeah, market is always unique. So we can't expect once the PBL is done, price has to hit the take profit. No. So once the PBL is done, price can reverse. So it showed me today. So I must not expect anything from the market. So yeah, that's it from EU. So there was one winning trade, sorry, one losing trade and one break-even trade. So yeah, let's jump into GU and see what happened in GU. So let's start the analysis of GU, where I got a break-even trade today, and there is nothing apart from the break-even trade. So if I jump into the daily is actually the swing structure is bullish, the internal is also bullish, the fractal is also bullish. Price mitigated this daily demand and chalk bullish. So I can look to follow the bullish order flow and also the prices in the daily demand. So you can expect this demand to hold and the price can push up. But I must be aware that there is equal lows here, so the price can come down to, I mean, um, a wick below to take all the sell liquidity and then it can move up. So coming into the 4-hour time frame, the 4-hour swing structure is bullish. Internal is actually bullish. So the both internal as well as the swing structure is aligned with each other. So I can look to target longs with this H4 demand. So, but with this bearish momentum, I must be cautious and wait for the clear H1 directional shift before taking longs. This is a bit zoomed in version for your convenience. So this is H1. So this is H1 swing sector is bullish. Internal is bearish. It's actually failed phase A. Actually, the internal was bullish for some time, but after news, the internal structure shifted bearish, possibly because it wanted to take out the strong swing low. And yeah, this is a low resistance liquidity and price. I don't expected something from this from the daily demand, but when I zoom into the 4-hour demand, it is nothing but a low resistance liquidity. But yeah, price respected it and then it went, almost took out the swing high But yeah, with the news, price came down and it mitigated this daily, I mean, the 4 hour slash H1 demand, and it made a failed reaction. So with this failed reaction, it is a first possibility that the demand can fail. So so my target would be the sell side liquidity below this demand. So once this demand fails, there is nothing to the left. So price can easily take out the strong swing low. So this is TP1 and this is TP2 for the swing traders who wish to have hold the trade for longs. But for me, I usually stop my trade at TP1 itself. Yeah, how this is a bit zoomed in version, and you can see clearly a failed reaction and sell side liquidity in vicinity of the price. So obviously, price will take the sell side liquidity before taking all these sell side liquidity. Okay, one more thing is that this is a good POI because it has swept liquidity and pushed a massive, I mean, and had a massive push down. So this is a good POI from which the price can, tap into this one and then push down to take out the sell side liquidity. And yeah, here is one more H1 demand, which is very strong because it has all the criteria, the basic criteria filled, and possibly you can, from it can be the deciding factor where the price can react from this demand and push the price up. So, but I can look for phase C shorts till the price reaches this H1 demand. So once this reaches the H1 demand, I must be cautious and wait for it to fail before following the bearish trend. Price tapped into the H1 demand. So I must sit patiently and wait for it to fail. So we can't take trades now. And yeah, it failed. So now I can look for shorts because there is nothing to the left except the 4 hour demand. This is the valid H1 demand, but H1 is my medium time frame, so it is not valid. I'll be considering only the H4 demands. So at 11:40, price took the strong internal low, strong swing low. So I can look to follow the bearish order flow using the POIs that was formed during the session. So with that in mind, I can see that this POI has actually flipped this demand and then it pushed down. So this is a very good supply from which I can take shots because again it satisfies 4 out of 8 criteria, which is fine. And also unlike EU, which has a high probability POI, this POI is medium probability, but it had all the 4 boxes ticked for me. So that will do, right? So the only risk factor is price was having an unmitigated H1 supply above. So price could pull back further up to mitigate the supply and then it can push down, possibly. But for now, I was interested in this trade. And the entry was actually M15 LC1 lead. I mean, sorry, M15 lead, or I can also use confirmation entry. But I got LC2A, a much more high probability condition. So take break, pullback inducement, and price took that pullback inducement. But I didn't take trades here because the candle invalidated it. Next candle. So this one took the lead. So now it's much more high probability. So price took the pullback inducement as well as the leg inducement and mitigated the I mean M15 supply. So it's much more high probability to place my trades here. And so this was my entry, and you know my target was 2.6 hour. One second. Yeah, let me show it here. Actually, this candle was inside bar. Next candle took the high, so I had to adjust my take prop my entry method. So my entry was around rare and stop loss was just above here. And the thing is, this POI has actually took some liquidity and then pushed the price up in M15 in the lower time frames. So this could be a potential demand from which the price could respect and then push the price further up. So if the price takes the you know invalidate invalidates this demand, then I would break even my trades because once the demand is invalidated, like uh, the supply to demand flip would act as a barrier and not allow the price to come up. So that was my intention. Yeah, actually, it happened. The yeah, this was the demand, and there was this supply to demand flip. So there was this supply to demand flip, So I just placed my stop in the my stop loss to break even. Once the price almost took this low also, I put my stops to break even, and I thought with this bearish momentum, the price is definitely going to reach my take profit. But after before sleeping, when I just came and see the trade actually hit my stop loss. So yeah, it is annoying. It is with all the confluences when you place a trade and the trade simply hits your break even. It's just annoying, but it is what it is. Like, yeah, we can't control the market and we can't predict the market. So we just play our rules. We just play our rules by the primary drivers in the market, like market structure, liquidity, and supply and demand. So sometimes it may play out. So sometimes the market dynamics quickly change because yeah, it is New York lull and this is closing time. So possibly closing time, the dynamics change because my strategy works only during the peak hours, that is the kill zone CKA. During the lull periods, possibly it can work. Sometimes it cannot work. So this time it didn't work. Thank God I managed my risk and put my stops to break even. So it is what it is, and yeah. Nevertheless, it's a good trading day. Analysis was top notch. Execution was also top notch. The result is just I need to focus on the macro picture also while focusing on the micro impact of all the trades. So it is what it is. Just move on it. So see you on day 97. Until then, cheers, guys. Bye.